Hello everyone, welcome to the ichimokocharts.com daily analysis for the US dollar index for Monday, April the 11th, 2011. Well, a continuation of a trend to the downside today, and we can see we've got a candle with a lower high and a lower low. Quite a change of character in this market, however. Previously we had a very large red-bodied candle, a very bearish candle that tested just below the support at 75. Today we have a green-bodied candle, and previously the sellers were in control and they made very solid net bearish progress. Today the buyers have made net bullish progress, albeit only a very small amount. But it certainly does tell us that the bearishness that was in this market previously has dried up. Now the trend is still down, however, so we do need to keep that in mind. In candlestick terms, there is potential for a change of trend here. It is a potential bullish harami pattern, and the harami pattern is when we have the prior downtrend, we have a large bearish candle, that's the one on the previous day, and then the body of the current candle is engulfed by the body of the previous candle, and it does offer potential for a change of trend, and that's basically because the bears weren't strong enough to take the body of the current candle below the previous, so that is quite important. In candlesticks, the bodies of the candles are very important, and the position of the bodies and the size of the body. So here we can also see that the size of this body is very much smaller than the previous. Now this is also almost another type of candlestick pattern, but it's not quite. It could have been a hammer, and the hammers occur at the end of a decent downtrend. We have this fairly well established downtrend that we had in place for a couple of weeks, and we have a small body basically at the end of the trend and a shadow on the bottom of that body. The shadow on the bottom of the body for a hammer needs to be twice the length of the body of the candle. In this case it's not, so it does tell us that this isn't a hammer pattern, but it almost is a hammer pattern. The sentiment is fairly much the same, but probably doesn't have the potential for as strong a reversal as with a proper hammer. The hammer is a potential bullish reversal pattern because we have a small body compared to the longer previous body, and we have this shadow on the bottom which represents the loss of commitment from the sellers. So where the sellers were previously in control and showing strong commitment, now they've lost commitment, and that's why that's a potential change of trend to the upside. With any of these patterns, these bullish reversal patterns, we do need confirmation, so we do need to look to the high of the current candle, which is at 75.09, for a potential higher high and higher low to confirm any of these patterns that we might be seeing. Now in Ichimoku charts terms, we are trading down below the cloud, so we have an overall negative bias. We have the market also trading below the Kijun-sen and Tenkan-sen, so the market is negative in terms of fast-term time frames, and the Chikou span is below the corresponding price action, confirming the bearishness that we're seeing in this market. If this market does rally, there's potential for resistance at this previous swing low, which is at 75.26, 75.30 roughly. So potential for resistance there, and potential for strong resistance at the Tenkan-sen, which is at 75.75, at the round number 76, and at 76.13.5, where the Kijun-sen is trading. Above there we have potential resistance at 76.60 and all the way up to the top of the cloud, although the market won't be trading up there anytime soon. To the downside, if the market does continue trending down, we do have support down at 74.31, extending down to 73.87, so still good strong support down below. The 75 area here is very important for the market. We had this bullish close just below there, and we did mention that we would have liked to have seen the market extend down below that area. Today the market's failed to close down below there again, so there is potential for that change of trend, but the 75 region is important for any potential test down to 74.31. So if we are going to test down to 74.31, we would like to see a decent bearish close down below 75.